3, 2, 1, skew.
Life insurance agents love to argue that when it comes to term life insurance or whole life insurance, whole life is a better deal. As you'll see shortly, they are completely wrong on this. I'm going to first explain how each of these life insurance policies work. Then we'll discuss why term is better. Finally, I'll show you why agents push whole life even though they know whole life is usually a very bad choice. The purpose of life insurance, if your main concern is protecting your family, term insurance is wonderful. Whole life, on the other hand, is an awful solution for this. The reason? Cost. Term insurance is extremely inexpensive, as you'll see shortly. But whole life, or permanent life insurance, is very expensive. That's because when you buy whole life, you actually pay for term life insurance and then some. That's right. The insurance company collects the same term life premiums, but they don't stop there. The company collects a great deal more from you. They do this in order to put aside money to pay for future premiums. The concept is that if you give a lot more money to the insurance company, they'll take that cash and invest it for you. At some point, they say, the investments will be so large that the investment account will pay for your insurance and you won't have to write a check every year. Of course, the insurance company charges you huge fees for all this service, and that's why the idea fails. You could take those extra premiums and invest them yourself far better and far cheaper. Let's look at an example to explain this a little better. I ran a comparison for a 41-year-old male who wanted to buy $500,000 in life insurance. A 20-year term policy costs $495 a year, while a whole life policy costs over $6,550 a year. After 20 years, the term policy costs you a total of $9,900, while you've shelled out over $121,000 for the whole life policy. Remember that you could have invested that money yourself over that 20-year time period. The return the insurance company guarantees to pay you in this case is about 2% per year. That's a very stingy return if you ask me. I realize that rates are very low right now, but over 20 years you should be able to make far more than that. So why is the insurance company only paying you 2%? Because they are earning a lot more than that and keeping those profits for itself. That's why whole life is a very bad idea. Many times the whole life policy costs you as much as 10 times more than term life. As bad as that sounds, it gets worse. Because it's so expensive, people buy a lot less insurance than they need, so their family goes unprotected. That is the worst part of this story, and it's something I'm committed to correct.